All right. So I think there's probably still some more people joining, but do have a fair amount of content that we want to cover with you all today. So we're going to launch into it. So welcome everyone to today's webinar, which is called How to Build a Business Case for Payroll Transformation. Thank you for taking the time out of your busy schedule to be with us, to have this discussion with us today. My name is Mark Oliver Fiedler. I'm the founder and CEO of Payzaar. Payzaar is a new innovative global payroll solution. It's an open plug-and-play concept that allows you to manage all your payroll operations, your payroll data in one central platform without having to change your local payroll systems, your local payroll vendors that you're working with. You can essentially plug in any local payroll solution and manage the local payroll operations through our central platform. I'm joined in today's webinar by my friend and co-founder, Trevor Townsend, who's also our COO at Payzaar. And we're going to host this session together with you. Before we jump in, just a few quick housekeeping items. All of the lines here have been placed on mute. If you do have questions throughout the session, you can use the chat function that you should find in your control panel to ask questions, and someone from our team will pick up those questions, either answer them right there, or we will collect them for the Q&A part at the end of the webinar. So we do have some time set aside to get into questions that folks here on the line might have. We're planning to spend probably about 30-40 minutes presenting, sharing our thoughts on the topic with you, and then we'll open it up. The session is being recorded, and we will share the recording and the slides that we're walking through here afterwards with everyone who has registered for the webinar. So with that out of the way, let's talk a bit about building a business case for your payroll transformation. You know, the business case will be a very central part of any transformation project. You know, you have potentially identified some areas where you want to make some improvements in your payroll operation environment. You have spent some time with your team analyzing what are some of the areas that you want to tackle. Maybe you want to change some of your processes. Maybe you're looking to bring in a new vendor or a new system, and you've done your research on what solution might be able to do the trick for you, and you've determined which of those you like. And now comes the fun part where you need to be able to articulate why you want to run this kind of initiative and what the benefits are and the impact for the organization, right? You need to get support from your senior stakeholders to get them to buy into the project and give you their approval to move forward with the project. And so that's why the business case is so central and important in any transformation initiative, to be able to articulate in a very clear, concise manner, in a convincing manner, how the initiative will help to advance and have a positive impact for your company. And essentially, there's three main components. You know, nothing terribly surprising here, I would think, but it's still worthwhile calling out what makes up the three most important elements of any business case are: number one, the gains or the benefits, right? What are you expecting to get out of the change, transformation that you're looking to drive into the organization? Number two is the investments that are required to make those changes. So typically, you know, nothing comes for free. You need to, invest either in external partners or internal resources to make the change happen. And so you need to weigh the gains, obviously, against the investments and the cost that comes with the change. And then the third key element, and sometimes it's something that gets overlooked a little bit, what it is critical to understand is the time frame in which the benefits will come to bear, will deliver on the promise. Because obviously it makes a big difference, if you're running a project and let's say you're investing 100,000 euros to transform your operations, and you're expecting a return out of that of, let's say, 200,000 euros, whether that return will come 6 months after you start the process or whether it'll take 6 years to get there, right? That will make a very big change. And that's why a lot of times you'll hear, your CFO or the finance folks ask about what's the payback time frame, what's the break-even time frame for a project. So understanding how quickly you can get to the positive impact is absolutely crucial, right? So those are the three core dimensions of a business case, and that's what we're going to be walking through in the rest of the session today. That also translates directly into our agenda. So you'll see that we have it broken down by those three components. We'll start talking a bit about the gains. Why do a transformation? What kind of positive impact can you expect to have out of that? Understand what the investments are, what different dimensions you need to think about from an investment perspective, and then we'll talk about the time component. At the end, we want to bring it all together and leave you with some overarching final thoughts on the business case exercise. So with that, let's jump right into it. I'll turn it over to Trevor to get us started by talking a bit about the gains and benefits that we're expecting to get, or that you can expect to get out of a payroll transformation. So Trevor, over to you.
Super. Thanks, Mark. Really looking forward to the webinar this afternoon. So if we take a look at our gains, and I suppose the first up is taking a look at efficiency. And I want to zoom out for a moment because I think we're at an interesting point in the economic cycle. Inflation is up and businesses are under enormous pressure to drive efficiencies to be price competitive, especially when their input costs are rising. And if the current economic cycle turns more negative towards recession, in a funny kind of way, it might actually help get your business case approved on the back of efficiencies, because the growth initiatives and the growth imperatives that you will compete against are likely to have less resonance in a down cycle, in a recession cycle, than, okay, we now need to batten down the hatches, we need to look for efficiency gains, and we need to figure out where can we do more with less or more with the same within the organization. So if the cycle turns more negative than it is at the moment, and there's a high degree of uncertainty out there, it might actually play into your favor. And one of the things I'd encourage people to do, even if you don't have a project that's currently signed off at the moment, maybe dust off a business case, because the opportunity might come up soon to get that initiative off the ground, and it might be a great time to pop a business case in. In all of these things, you need to, outline a business case, but you need to quantify it in dollars, euros, cents, rupees, whatever your currency is. Everything needs to be quantified, because as Mark mentioned at the start, the key factors are, the gains and efficiency gains you have to demonstrate, and you have to quantify those in dollars, because that's what you're going to save. And the investment is, the cost you're going to put in tangible dollars within the organization to drive and achieve those efficiency gains. Because overall, when your business case is being evaluated, it's being evaluated against other initiatives from within the organization. It needs to demonstrate clear and tangible benefit to the organization. And really what it comes down to is the senior leadership team that will review your business case will be looking for the clear benefit, and is this initiative really worth the investment in time and money? Will we harvest the gains from it? And you need to be very, very precise, and you need to be very clear about what you're trying to achieve across this efficiency gain dimension of your business case. So we've listed some here. The move to shared services. How can you get there quickly? How can you get to shared services effectively? And once the payroll function is in a shared service, how can we see economies of scale, and how can we achieve synergies with other teams that may be in that shared service center? Everyone is looking at technology at the moment to drive process automation and data integration, because enormous amounts of effort are being put into that by the payroll team, often quantified as high as 60% of the effort in the payroll cycle each month is consumed by aggregating data together, manually knifing and forking that data to get it to where it needs to be to calculate payroll. And with all of those manual processes, they are error prone. So looking back over your payroll landscape, look how you are currently organized, which, are you very distributed in local countries? How can maybe you take some of those costs out locally, concentrate them in a shared service center, harvest and harness technology to drive better automation, better efficiencies? These are going to be key things to put dollar and cents savings beside. So Mark, if you want to move on from efficiency gain, please. Risk. Your organization is going to have different levels of appetite for risk, and we've some risks listed here, and it's really good to know what the appetite is for the organization. How does the organization identify, assess, and then mitigate risk? And what you need to do in your business case is, especially if you're unfamiliar with the risk treatment within the business, is to make sure that your business case mirrors the language, mirrors the assessment that the business would undertake for other risks. And again, there's going to be cynics in the organization that will say, they'll flip to the risk page on your business case slide deck, and they'll say, well, look, it's a risk getting out of bed in the morning because I'm going to break my ankle. And of course, that's easy. That's an easy kind of soundbite as the business case is being assessed. So what you should really try to do is look for independent quantification of the risk from third parties. It could be your internal audit team, it could be your external audit team, it could be trends, for example, in data incidents, or it could be key people dependencies or key people failures across the business where it's had a material impact. And that's where a risk becomes an issue. But if there's a trend where the number of risks, they're no longer risks, but there's a trend of risks becoming issues, you can quantify the downstream impact of those in terms of penalties, in terms of missed deadlines, in terms of cost of rectification. And that then helps to address the cynic who's saying, well, look, we've risk everywhere in the organization. But the key thing is, if you quantify the risk and then, you say, well, okay, well, what's our risk treatment plan for that? Are you going to personally sign off and accept that risk? And that's a way of dealing with the cynical view of risk. And we all saw it as we entered into the COVID crisis a couple of years ago. The number one risk on most national risk registers was pandemic. So it was the number one risk. Everyone thought it was incredibly unlikely. So there was very little investment made into that risk. And then we saw how unprepared we were when that risk actually materialized. So your payroll transformation project, you need to quantify your risks, look for those external verifications of the risk, understand how the organization mitigates, and then weave that into your business case to say, look, with stronger operational controls, better automation, better tools and processes to manage your data, you can mitigate an awful lot of those risks. And again, risk can be quantified. So try to get that to your dollars and cents. So moving forward then, labor cost optimization. And part of your business case might be looking and say, well, look, what can we achieve in terms of synergies from how payroll is done today? And that might form part of your business case. But a key thing that we find when we're dealing with our customers all of the time is that we're sitting in the payroll industry on the most accurate data in the organization. And for most businesses, payroll and payroll costs represent somewhere in the region of 65 to 70% of the operating costs of the business. So we're in a marvelous position that if we had the right tools and we had the time to look at that data, I think you could really start to squeeze out some efficiencies. However, what we do find when we start working with organizations is that because of the very local nature of payroll data and the distributed nature of organizations operating internationally, it's very hard to aggregate that together. But if you had all of that data together, what insight could you draw from it? Now, you may argue that that data is aggregated in the finance system through your general ledger journal entries, and this is true, but it's not particularly easy, convenient, or drill downable type data. It's hard to draw insights from it. And when we think about elite sports people, when we think about high degrees of performance, you know, they're not after the 10 or 20% gains at the elite level. And if we think about our jobs then in payroll, if we look for marginal gains, we're talking about the 1%, the half of 1%. And if we think about the half of 1% of the salary cost or the payroll cost of a 3,000 person business, let's call it 200,000 euros. Half of 1% is a big number. You know, 1% is a big number. And if you can feed ways into your business case to say, well, look, let's elevate the discussion beyond what synergies can I find within the business, by moving to a shared service center, for example, for payroll, and really focus on the power of the data and look for those small marginal gains that you may find by squeezing out anomalies, benchmarking, finding biases in the data, looking for inefficiencies in how the business is run. And the payroll data will tell you that. And if you can find little 0.5% here and there, they're big savings and they can really make a huge difference to your business case. So moving on from there, there are some other benefits that are probably a little bit harder to quantify in dollar and cents terms. And but they are very supporting in terms of strengthening your business case. So you won't necessarily lead with some of these items as you make your argument for investment, but they'll certainly help to underpin your efficiency, your risk elements of your business case. Like business continuity, for example, is one. And COVID all taught us that, you know, the desktop exercises that businesses had been conducting for a number of years, there's probably a few holes in them, because when you actually have to, you know, move from the office and everyone is remote and figure out how do we work together in a new world, it really put businesses to the test and put those business continuity plans to the test. Of course, we want in a tight labor market, everyone is looking to drive a very positive employee experience. So squeezing errors and anomalies out of the payroll process for staff is important. But one of the big ones for me, maybe if I'm appealing to the senior leadership team in a business, is around agility and scalability. Like organizations are changing all of the time. They're changing in shape. They're changing their theater of operations because they're going to send Pathfinder teams out to new countries. And next thing you know, you have a team in 3 or 4 countries around the world that, you know, we weren't operating in last year. Payroll team then find out about, well, we have to pay those folks now in these new countries. And of course, there's measures that businesses will take, you know, corporate action, some mergers, acquisitions, and suddenly your nice, neat payroll process that you had under control is, you know, a big spanner has been thrown in the works through an acquisition. And you need to find yourself a model to be able to support that business growth and be able to respond to the business. So So I suppose I'm going to close off there with, some ideas around those gains, making sure that, you quantify where you can. And I'm going to hand over to Mark now to talk a little bit about investment.
Perfect. Thanks. Thanks, Trevor. And just to add one further comment on, the various gains that Trevor just walked through. I think especially that third one about the labor cost improvements, in my experience at least, is one that in the payroll function, a lot of times we tend to be quite focused on the impact that we have on our own immediate environment in terms of optimizing, automating our own processes, the accuracy of the data, improving that, reducing errors, and that's obviously very, very important. But I think the impact that payroll, with the very comprehensive data that's being gathered about the employee base, and with the very reliable information and most up-to-date information that exists anywhere in the organization, that we're collecting in payroll, making that data, putting that data to work for other functions, right? It's not necessarily payroll who will start to analyze that information in order to make improvements around the labor cost structure, but it's HR, it's finance, it's the comp and ben team, right, that can draw huge amounts of inside information out of this. We have one client, for example, that uses our platform to collect data from payroll, from their finance system, from the HR system. And one of the things that they're specifically very interested in doing is they're validating and reconciling vacation balances, right? Which can be a huge cost factor. If you have a few hundred or a few thousand employees, all the vacation that is being accrued by your employees, can be in the millions. And they found that historically there were big discrepancies between what their finance system told them the accrual needed to be, and ultimately what truly in the payroll system was actually captured as vacation taken. So they're using this insight and putting a transformative payroll solution on top of their existing payroll environment and finance environment in order to drive much better insights into their labor cost and saving themselves huge amounts of financial exposure through that. So I just wanted to throw that in there as well. So let's talk about investments, because no good solution that drives all these gains and benefits that we just talked about comes entirely for free. And generally, there's two main investment elements to factor into your business case to think about. Number one is your one-time implementation cost, right? So whether that's a new vendor, whether it's a new system, whether you're changing your organizational or operational setup, you're implementing a shared service structure, or making some other process improvements, there is some initial project effort involved in that. And the quantum of that effort obviously depends on your specific organization, and what your starting point is and how much change is required. But fundamentally, you can break that effort and the cost that comes with that down into two key aspects. One is the external implementation cost, i.e. what the vendor that you may be working with in order to make the change happen, what they charge for the setup. So, if you're bringing in a new payroll vendor, a new payroll partner, they will typically charge you a certain amount of implementation or setup fee. What we're seeing in the market, you're bringing in a new payroll solution, that can be anywhere between 2 to 3 times the monthly fees. But again, depends on the exact scope of the solution. And that's probably the most explicit cost that's fairly easy to capture, because you get a proposal, you get a quote from the vendor, and it will call out what their one-time fees are. The other part that's at least equally important, if not more important, and can be a bit harder to quantify, is all the cost that is incurred internally in order to make that project happen, right? So you will need a project team, some project resources, PMO resources, people on the ground that help to facilitate the rollout of the new solution. That there can be some disruption to the ongoing day-to-day activities that team members are getting pulled into this project would normally be working on. So that can cause some additional cost. Data migration, you need to do parallel runs before you can actually switch live a solution. You need to do a lot of communication out to various different stakeholders that get impacted by the solution that you're trying to roll out. You might have to look at how your new setup integrates with adjacent departments or systems in the finance and HR world. So all these things will require effort, will require resources to make them happen. And in many cases, the internal cost can be much higher than the more explicit quantified cost that you get quoted from the external vendor. So that's why it's very important to really think about what the implications are, who needs to be part of the project, and how you quantify the capacity that's being tied up by the resources that will make this project happen. So that's the first element, is one-time implementation costs that need to be understood and captured as accurately as possible. And then the second part to the cost picture is the ongoing fees and costs of the new solution that you're putting in place. And this, will obviously heavily depend on your specific situation. What scope of solution you're putting in place, how many countries you have, what's the size of the population in those countries, how much you're leaving in place with what you started with versus what you're actually looking to change. Typically, what we see, having worked in this industry for quite a long time, you can see my gray hair. We find that implementing a traditional global payroll solution will amount to 2 to 5 times the typical local unaggregated payroll solution. So if you pay a certain amount per employee for a sort of standard domestic local payroll solution, you can expect for a global aggregated solution pay anywhere between 2 to 5 times that. So that needs to be factored into your business case. The other thing that's, again, not as explicit, but something to also account for and watch out for, and the vendors you're talking to may not call these out as clearly as maybe afterwards you would have liked to have been made aware of, are things that can factor into your run and maintain costs. So in a lot of cases we find that there are certain services that are not part of the core global payroll solution that you still need at the local level. Maybe you need some specific local expertise or advisory services that are not actually part of the global contract. You may want or need custom reports from your payroll vendor. In a lot of cases, that may be something that you're being asked them to pay for extra. So something to be careful about evaluating. Ideally, of course, you have ask those questions specifically up front. You understand what you will, what you expect to need, and you will ask the vendor or vendors what's included, what's not included, and if it's not included in the base fees or in the base quote, you ask them to give you a quantification of that. Because otherwise, what we do see with customers is a little bit the death by 1,000 paper cuts. You get, charged for this and for that extra, and by the time you add it all up, suddenly, your monthly bill ends up being a lot higher than what you originally had budgeted for and anticipated. So, that's something to keep in mind and something to factor into your business case as much as possible up front as well, just so you have a true and honest picture of what the total cost of the solution is. So those are some of the thoughts, some of the dimensions of what you would want to build into your business case from the investment and cost perspective. Let's talk a bit more about then the time dimension, which is sort of the third leg to the business case stool, and pass it back to Trevor to talk us through some thoughts on the time element.
Great, thanks, Mark. We've one slide to talk about time, but this is big and it's a crucial topic. And some of our previous webinars, when we spoke about preparing for a business case and the cultural and political dimensions of getting decisions made, time is crucial because there's lots of studies about projects and transformations and programs, the successful ones and the ones that fail. And McKinsey have published some great work on why projects are challenged, and they never get to the starting gun, so they never launch, right? So your business case just never gets approved. You can't rally enough support behind it to get it to the start gate. Then there's the failure to scale and failure to sustain. And failure to scale means, okay, your business case has been approved and you've started to roll out, but you don't get past, for instance, in a payroll context, maybe past a couple of countries. And once you make a change, then the failure to sustain is, how do we keep all of our different operating companies in different countries and regions around the world all hooked into our ambition to have a global model? And one of the big reasons is demonstrating time to value. It's just critical. Organizations operate to really short cycle times. You need to be able to demonstrate that your business case is built on achievable milestones that aren't fatiguing for the organization, because the organization needs to know that they're worth doing, they're worth putting the effort into. And the longer these take, the more it's going to cost you in terms of internal costs. The more it's going to cost you in terms of, I suppose, career and reputational cost as well, because you've backed and you've managed to push through an initiative that's just unwieldy and it's hard. So you really need to work with your vendors as part of your business case. And a point I would make here is that as you build your business case, you are likely to want to push a couple of different options into the frame, because different options offer different time to value around global payroll. A traditional aggregator type approach will necessarily be far longer than a more agile payroll as a service, platform as a service approach delivered by Payzaar, for example, because the traditional aggregator approach is going to rip your payroll up in each country by the roots, a rip and replace type approach. So you want to make sure you have a very good, realistic implementation plan. You probably want to put competing models into the frame in front of your management team that attend to this time to value and just general organizational impatience for long projects now. And think about ways in which you maybe could modularize your rollout. Could you lead with analytics and data first? So you're giving the organization a big hit, maybe integrated then with your general ledger, journal entry, integration for your finance system. Pull together then your operational control to harmonize your collaboration between your shared service teams, your regional heads, your in-country supports, your local payroll partners in different countries, and essentially build a business case that kind of de-risks this time to value and an initiative fatigue that's ever present in organizations now. Because the organization really doesn't want to lock up lots and lots of resources in something that isn't going to deliver pretty immediate type value. So as I mentioned, I think it's it's very important to put those competing models into the frame in your business case, just to show the stakeholders within your business that you've been thorough, to say, look, here's the traditional approach. I know what that looks like. Here's a new platform as a service approach from vendors like Payzaar that might give you a completely different perspective on time to value, and then have a go. So I think this whole time to value thing is hugely important. It has one slide here, but take a look at some of our previous webinars, because we really drill into this in much more detail there. Back to you, Mark.
Great, thanks, Trevor. So look, we've talked about all three main dimensions of the business case: the gains, the benefits, cost and investment part, and the time dimension. All being, crucially important in order to be able to articulate a powerful, convincing business case to yourself and to the rest of the organization. We want to leave you on a few final thoughts. We realized we went through quite a bit of information here, and hopefully you found that useful. One of the things that obviously you might ask yourself is, we talked about a lot of different factors that impact your business case: risk dimensions, efficiency dimensions, labor cost dimensions, the cost side. How do I quantify all of this now, right? And that is actually exactly the right question to ask. And it's not trivial, right? I would say, based on having built business cases for different international organizations over the last 25 plus years, myself and with customers together, it's as much a science as it is an art, and it requires, first of all, a solid understanding of your baseline and what your starting points are. It requires a decent amount of research into what levers you're working with and what impact you believe you can have, and then it requires some healthy amount of estimates and assumptions to build into that business case to basically project what might the future look like and what impact can be gained from that. Now, to get into those quantifications and how to calculate all the different dimensions of your business case would certainly blow the frame of a webinar like this. That's not something that you can properly walk through in 30 to 40 minutes. But what we can offer is, because we've done these exercises with clients, we have created a business case tool. And that's something that we're happy to share with folks out there that are interested in diving deeper and learning and understanding more how you can go about the quantification part of your business case. And so if you are interested in that tool and would like to spend a bit more time on that, just reach out to us. You see the email address here at the bottom, info@payzaar.com. And we would be happy to make that available to you and follow up with you on that. Remains to say that there's lots of rich information to be worked with and to be tapped into. The other thing I think that's worthwhile pointing out is, while the data and the numbers and the quantification is very, very important, and definitely deserves the time and effort to try to pull that together as diligently as you can. That's not everything. That's not all, right? There is to making a strong argument and supporting your business case. It's also important to understand the overall cultural and political environment of the organization that you're working in. And that's changing, of course, all the time as well. Trevor mentioned at the beginning, we're entering volatile economic times, and what's important, or what was important maybe 6 months ago or a year ago to the organization and your senior leaders can quickly change, right? And so one of the important things as you're thinking about articulating your business case is, understanding what the broader priorities and objectives are that your organization is working on, right? And how can you, from a payroll perspective, contribute to those objectives? How can you help to support those objectives? And those might be, issues that at first glance have nothing to do immediately with payroll issues or problems, but that you can help solve with the tools and with the information and the the resources that you are tapping into in the payroll context. So we mentioned one example here is understanding cost of employment and employee turnover, and what it costs you to have an employee in one location versus another location. This whole visibility is something that certainly in a context where there's more scrutiny about profitability and cost optimization, is something where payroll can absolutely contribute to the success of the organization. Or compliance, right? So your organization might be going through some corporate changes. You might be getting ready to take the company public. You might be going through some M&A processes, and that comes with increased scrutiny from a overall governance, compliance, and regulatory perspective of the things that you need to be able to demonstrate. And so again, it's important to understand that, so that you, as you're talking to your senior leaders about what positive impact your payroll initiative will have, you can tie that into that broader corporate strategic context and demonstrate how your payroll transformation will support the goals and objectives that the broader organization has. So I think that brings us to the end of the webinar, or at least of our prepared remarks for the webinar. Those were really all the slides that we prepared for the session today. So at this point, well, first of all, I'll thank you for having joined us for the session, but we would like to open it up to questions, comments, your own experience in working on business case that you maybe gone through in the past. Love to hear what your thoughts are, and help to provide our thoughts and perspective on anything that you have from your side. So let's take a look. I think there's been already a few questions coming in as we've been going through the slides, and let's take a quick look at what we've been getting in here. So let's see. One of the questions that's come in is regarding the cost of change. Can that be offset in a way if we extend payroll and finance services to incorporate FX, foreign exchange harmonization, within a more holistic approach to end-to-end payroll and then into a consolidated GL? So I'll start providing my perspective on that question, if I understand correctly, and then Trevor, feel free to jump in here as well. But look, as you're looking about a payroll transformation, I think that sort of the question touches on something that I said earlier: optimizing processes, data and information within the payroll environment. In a lot of ways is not something that we do in isolation, right? Payroll lives so right at the intersection between various different functions and departments within the organization. Typically it's HR, it's heavily tied into payroll. Finance is heavily tied into payroll in terms of all the financial transactions that come with payroll. And so absolutely, part of the business case we see is building closer integrations between the data flows coming out of your HR environment into payroll, and then integrating your payroll data into your finance system, into your general ledger systems, that can have a very positive impact from a just time spent on wrangling with the data, which in many organizations still happens in a quite manual manner. Data outputs coming in, and then you're kind of refactoring those to fit them into your payroll system. And once it comes out of the payroll system, you're refactoring it to make them fit into your chart of accounts, into your financial systems. So automating those processes, which we have, for example, at Payzaar, we have created tools, integration tools, data connectivity tools that allow you to do that in an automated manner, can lead to significant time savings. More importantly, probably, is the fact that it also allows you to mitigate or eliminate a lot of the potential errors. Every time you touch, a data element manually, it introduces the risk that something during that process of transforming it manually goes wrong, and suddenly you have some errors and discrepancies that enter your payroll data. So that would be my perspective. Trevor, anything you would add to that before we jump on to the next question?
I think, Mark, I think you've captured it pretty well there. I think there's a couple more questions in here, so we might keep moving. I might pick up the next one then.
Yeah, feel free. Go ahead.
Yeah. So we have one in here about vendors' time to value and, talk to talk but fail to deliver. And basically we end up in a contractual situation that we can't get out of, and the project just becomes very, very difficult. So, what can we do to protect ourselves before embarking on the change? Well, I suppose, first of all, take a look at different models that are available. If we want to go global payroll down a traditional aggregator route, and you're not already working with that traditional aggregator, expect your payroll process to be pulled up by the routes. What will happen will be, on a country-by-country basis, your existing local providers or local in-house software will be ripped out. We know this is going to be hard because you do it in one country, you know the process. You got to figure out, how do I connect my data up again? How do I, support the parallel runs? There's going to be a lot of effort on your side to do it. Essentially, there's going to be a lot of disruption, internal disruption to your business to support that project. If you're told it's going to be easy, it's not, right? Just use a little bit of common sense. Don't be deluded. The other aspect to this then is put a competing model in place that maybe, for example, says, I don't have to rip out all of my existing relationships and connections with my existing local payroll providers, right? Big advantage of this is we're not getting into the knife fight of recalculating and parallel running payroll and transitioning payroll on a country-by-country basis. A lot of effort saved there. Secondly, there's a lot of internal change management effort and fights with your local in-country teams who will resist change, because guess what? They're human beings, and human beings are hardwired to resist change. You avoid that conflict also. So put a competing model into the picture, like a global payroll platform as a service type model, which avoids all of that unnecessary local disruption and unnecessary risk. Of course, you should evidence this through the sales cycle, through the implementation approaches. Ask the questions about what level of effort will need to be performed by you and your team, what level of effort will be performed by the vendor, and what does the program look like. One approach, guaranteed open heart surgery. The other approach, a lot less disruption, a lot less effort, and with that less disruption and effort, much more rapid time to value, pretty much guaranteed. So I think they would be my thoughts on that particular question.
Yeah, and actually there's another question that came in that kind of, goes into the same direction. Question was, in your experience, can you talk a bit about what a typical payback time, we talk about time being so important, what do you see is typical payback time for a global payroll transformation? And I think the answer is, kind of along the lines of what Trevor just pointed out. Obviously, it's it starts with what your current starting point is, your current situation, how you're set up. But in our experience, if you are kind of implementing a traditional global payroll solution across, let's say, 15, 20 different countries, that will take many months, if not years, right? Probably, moment you're talking about 20 or more countries, you're looking at 2 years, 2.5 years of implementing that global payroll solution across all these different countries, because you can't just roll out. Typically, you want to roll out everything in parallel at the same time. So you'll have waves, and that will take time to get everyone into that model and get everything connected up. In our experience with this more open agile model, the turnaround can be very quick. We have clients, think of one specifically that has, global population across 60 plus countries. They went live with 12,500 employees in a matter of 3 to 4 months, got all their data harmonized, centralized, full visibility into their employee data, and are able to drive great value out of that centralization within that very short time frame. So the answer is it really depends on how you go about it, what kind of solution model you choose, and obviously also depends on what your starting point is, how messy or clean your current baseline is. Any other questions, Trevor, that you can see in the chat that you want to pick up on?
So there's one here which is the biggest lever or factor in terms of driving the business case. Obviously, cost is the biggest one, and getting a clear sense of the cost and the return. Everyone is going to look for that. But once you've quantified that, for me, the next biggest one then, of course, is time. You just can't underestimate the organization's level of fatigue and just figuring out, is this project really worthwhile doing in the array of other initiatives that will be up for decision within the organization? Why pick this one? And can we de-risk the decision-making process by shooting the lights out on time to value? And for me, like, if I was thinking of the emphasis, I'd be emphasizing that lever: low disruption, high return, speed and time to value. So for me, I think that's it's a really good question, and for me, that's where, if I had an initiative that I was carrying into the organization as a global payroll leader, I would really emphasize that point.
Yeah. Perfect. Let's see. Maybe we have time for one more. So there's one in here. Payroll vendors often do loose scoping exercises as part of the contracting process, which means there's more complexity, more scope in the process and requirements that result in incremental cost changes, request, time to value, that challenge the business case. Is there a best practice to lock in accurate scope prior to contract execution? I think it's a very good question. We touched on that a little bit, right? I kind of called that the risk of death by 1,000 paper cuts, right? That you get the vendor estimate, they tell you this is the fees, and then once you actually once you get started, there's all these kind of hidden costs that you start to uncover. And look, it can be tricky. I think the first point is probably the onus is back on you as the buyer a little bit to do your best possible job in your homework, to understand what your anticipated requirements are. What level of service do you need? Talk with your local HR and payroll teams. What scope of service are they expecting to have, so that you can make sure, as you're soliciting the quotes and the proposals, these different factors are built into the quote and into the business case. Or if the vendor says no, that's not part of it, you then need to go potentially externally to another partner. If the global vendor that you're working with doesn't support that scope of service, which happens all the time as well, and you need to find you need to go to someone else, to another third party, to get their get their input on, if you're looking for that type of service, what that entails. But I would say there's the typical things like some of the things that I mentioned. Reporting, I think, is a very common one that we hear all about all the time, right? I have my monthly service fees, but every time I go back to my vendor and say, listen, we need a specific report for this and that, they quote us a separate fee, and it takes weeks or months to actually get that report. And not to tout our own our own service too much, but what I would tell you is there are solutions, and you can look at ours, that do offer you self-service, which I think these days should be the default way of delivering a lot of these things, where in fact you don't have to go back to the vendor. You don't have to come back to us and say, hey, can you generate this report for me? You can actually build it yourself, right? So we're giving our clients the tools to run any type of report. It's their data, so they can go in, they can build custom reports, they can run as many reports as they want, one-off, repeat reports that they built, and that all is captured within the same subscription fee. So, but I do think you need to understand what you're looking to do, what you're likely going to, encounter or, ask for, and factor that into your business case, because it will be very different from the type of vendor that you're working with, what they do or do not include in their service fees. Let's see, we're right at the top of the hour. I know there's a few more questions that have come in. What I would like to offer to everyone, I want to be respectful of people's time. I imagine most people either here in the European time zone might be coming up towards their end of day, or other people have follow-up meetings. Let's do this. We will collect all the questions, and we will try to answer them either directly to people that ask them, or if we believe that they're more general questions that are relevant to the broader audience, we'll try to stick them into the follow-up communication that we'll share after this webinar. Okay, so let's wrap up here. Thank you so much again for your participation, for all the follow-up questions. I think it shows us that this is a very relevant topic that people are really thinking hard about. Again, we offer to you, if you're interested in diving deeper, spending more time on, looking at specific aspects of your business case, looking at our business case tool, or working through your specific scenario, give us a shout, and we'd be happy to follow up with you. The last plug I'll make here is, beyond the webinars that hopefully you're participating in, we do host a talk show, which is called Plug and Pay. We release episodes every couple of weeks. We have basically people from all around the industry that we invite to come on the talk show and share their experience, their perspectives on life as a payroll professional, with all the ups and downs and challenges that come with that profession. So I think it's kind of a fun format. We've gotten lots of very positive feedback from people that have been participating and listening to the episode. So check it out. It's on, you can find it on our LinkedIn page if you go to our Payzaar LinkedIn page, or you can find it on YouTube. If you just type in Plug and Pay Payzaar, you can find those episodes. Okay, so thank you again very much, and hopefully we'll be able to have you on one of our webinars in the near future. Take care and have a great day.